Welcome to the Money and Meaning Show with Jeff Bernier, a show dedicated to helping you gain the confidence and freedom to lead a life of personal significance and help you get your actions and resources in alignment with what matters most.
Well, hello and welcome to the Money and Meaning Show Perspectives broadcast, where we unpack the most pressing ideas in wealth management, economics, investing, and life, and try to find wisdom to navigate it all with clarity and confidence. Today's episode is all about balance. Specifically, how do we stay informed and even alarmed about very real economic headwinds like massive government debt, rising interest rates, and a shifting global financial system without giving in to despair? How do we hold these truths in one hand and still grasp the hope in the other? We're going to explore this tension through voices like Brian Westbury and Howard Marks, and also balance that out with the rational optimism of thinkers like Matt Ridley, Mion Tuby, Gail Pooley, and the ever-steady Nick Murray. Let's start with the tough stuff. Howard Marks, in his memo, More on Repealing the Laws of Economics, raises an unsettling question. Have we fooled ourselves into thinking the rules no longer apply? For decades, governments have borrowed heavily, spending without restraint, propped up by artificially low interest rates and accommodative central bank policies. But now the bill is coming due. U.S. government debt has ballooned past $36 trillion and rising. Debt service costs are growing rapidly, especially with higher interest rates. Just think about this. We're now spending more to service the debt in the United States than we are on national defense. That's a trend that isn't sustainable. Brian Westbury warns that this isn't just about numbers. This is also about misaligned incentives, bloated bureaucracies, and a distortion of the capital markets. When government becomes the largest player in the economy, we risk crowding out private innovation and entrepreneurship. And what's even more frustrating is not just the debt itself, but the missed opportunities to do something smarter with it. Take the so-called Big Beautiful Bill, a phrase that once promised bipartisan cooperation on long-term infrastructure, innovation, and real economic productivity. Instead, it morphed into a bloated package of short-term stimulus and spending priorities with questionable long-term payoffs. And today, the political system seems paralyzed. There's no credible plan to address entitlements, no political appetite to reduce spending, and no serious bipartisan movement to restructure the financial house. The can is being kicked down the road, and the road is looking awfully short. And then there's another emerging concern, one that doesn't get as much airtime: the foreign appetite for buying U.S. debt. For decades, countries like China and Japan helped finance our deficits by buying our treasury bonds. But that demand is softening. If foreign investors pull back or start selling, we may have to finance the deficits internally, which also drives rates even higher and potentially triggers crowding out that could weigh on both public and private investment. All this paints a sobering picture. And this isn't just theoretical. It has real-world consequences for inflation, for growth, and for asset prices. As rates rise, the cost of capital goes up. That affects everything, from home mortgages to startup funding to the value of long-term financial assets. But here's the thing. When you stare at these problems too long, it's easy to lose hope. Pessimism starts to feel like prudence. You stop investing. You hoard cash. You wait for a sign that it's safe again, some mythical moment that rarely arrives. And that's the trap. Because while pessimism feels responsible, it can also be paralyzing. It can cause inaction. It drives emotional decisions. And ultimately, it's often more destructive than the crisis itself. Pessimism may sound smart, but it's the optimists who end up owning the future. That's why we need balance. No, not blind optimism, not hand-wringing fatalism, but rational optimism. In Matt Ridley's book, The Rational Optimist, he gives us this hopeful frame because progress happens because humans trade, collaborate, and innovate. Even in the face of adversity, we invent our way forward, and we always have. Mion Tuby and Gail Pooley back this up with data in their book, Superabundance. They measure how much more we can buy with less time, what they call time prices. From food to fuel to technology, our lives are getting dramatically better and cheaper over time. That's the miracle of innovation and the compounding power of markets. And let's not forget our old friend Nick Murray, who reminds us that investors don't need to predict the future. They need to own the future. He says the most powerful thing a long-term investor can do is stay in the game. That wealth is not created by guessing correctly. It's created by participating faithfully in the only proven engine of wealth creation, human progress. And this brings us to a key point, resilience. Resilience isn't pretending that it's not hard or things aren't hard. It's the capacity to adapt, to learn, and to endure. Our economic system, messy and imperfect as it is, has shown remarkable resilience through wars, pandemics, political upheaval, and financial crisis. Resilience isn't just about systems, however. It's about portfolios, too. This is where portfolio construction mirrors life philosophy. A balanced portfolio gives you the freedom to not know. You don't have to predict when inflation will peak. You don't need to guess if rates are going up or down next month. You don't need to call the bottom or the top of the financial markets. You need a portfolio that can bend without breaking. A mix of stocks, bonds, maybe some alternatives, not as a hedge against short-term volatility, but as a commitment to long-term resilience, as a declaration that you're in it for the long haul. That's why diversification is so important. It's not just about numbers on a spreadsheet. It's about emotional stability. It's about giving yourself the ability to stay the course in an unpredictable world. Because markets will wobble. Headlines will scream. But a balanced, globally diversified portfolio anchored to your goals allows you to keep moving forward. That's the power of balance. So how do we live with this tension? Well, we stay awake, but not afraid. We stay informed, but not obsessed. We stay invested, but not overextended. We recognize that, yes, the system has flaws. The debt is very real. The distortions are very real. But so is the innovation. So is the progress. So is the human spirit that keeps showing up to build, to solve, and to reinvent. And we align our financial lives accordingly with portfolios built on principles, not predictions, with goals rooted in values, not volatility. So that's our reflection for today, a call to balance in how we think, how we invest, and how we live. Because balance gives you breathing room. It gives you flexibility. It gives you the precious ability to say, I don't know what's coming, but I am prepared. That's the gift of balance. That's the gift of optimism, with eyes wide open. Thanks for spending time with me. I hope you found this helpful. If it resonated with you, please consider sharing and subscribing. Leave us a review. And until next time, stay curious, stay grounded, and keep moving forward. Thanks so much.
Thank you for listening to the Money and Meaning Show with Jeff Bernier, a show dedicated to help you gain the confidence and freedom to lead a life of personal significance and help you get your actions and resources in alignment with what matters most. We would love to hear from you. If you have any questions or comments on the show, feel free to reach out to us at moneyandmeaning@tandemgrowth.com, or you can find us on the web at www.tandemgrowth.com. Jeff Bernier is the President and Chief Investment Officer at Tandem Growth Financial Advisors, LLC, an SEC-registered investment advisor. This show is a production of Tandem Growth Financial Advisors, LLC. All information discussed is general in nature, is provided for informational purposes only, and should not be construed as specific financial, legal, or tax advice. Listeners should consult an attorney or tax professional regarding their specific legal or tax situation. Listeners should not rely on the content of this podcast as the basis for any investment decisions. A professional advisor should be consulted and/or independent due diligence should be conducted before implementing anything discussed in this show. While information presented is believed to be factual and up-to-date, Tandem Growth Financial Advisors, LLC does not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Tandem Growth Financial Advisors, LLC does not make any representations or warranties as to the accuracy, timeliness, suitability, completeness, or relevance of any information prepared by any unaffiliated third party, such as guests on the podcast, and takes no responsibility for the same.